The new gold standard, why gold and silver are winning over fiat currencies, awake in 3D. Listen to the full version on the official dinarport.com website and become our supporter on Patreon. As economic instability looms, precious metals like gold and silver present a promising refuge against fiat currency devaluation. In this article, historic surge in precious metals, shifts in monetary policy and interest rates, implications of U.S. economic policies, financial risks and negative trends driving gold and silver higher, future projections for gold and silver. It isn't rocket science to understand that, in today's increasingly volatile economic landscape, the value of gold and silver relative to global fiat currencies has significantly intensified. This trend will continue, if not accelerate, from here on out. Since October 2023, these precious metals have seen dramatic increases in value, contrasting sharply with the unstable trajectory of fiat currencies. This article explains the enduring appeal of gold and silver as robust investments, particularly as economic indicators suggest a potential decline in the value of traditional currencies. Historic surge in precious metals. Gold's value surged from just over $1,600 in October 2023 to a remarkable $2,300 recently. Despite a decline in physical gold holdings by gold depositories, gold funds, and gold ETFs, and a 96% drop in coin sales from major mints, the price of gold continues its upward trajectory. This pattern underscores a significant shift as humanity increasingly views precious metals as a safe haven amidst economic uncertainty and fiat currency debasement. Shifts in monetary policy and interest rates. The reversal of the U.S. interest rate trend in 2020 marked the beginning of a secular uptrend, with predictions of rates exceeding 10% due to inflation pressures from growing government deficits and debt worldwide. This scenario places traditional monetary instruments under strain, particularly as central banks face challenges in controlling interest rates amid rampant government debt issuance. The predicted end to rate cuts further complicates the financial landscape, enhancing the appeal of gold and silver as more stable store of value and purchasing power against falling fiat currency value. Implications of U.S. economic policies. The U.S. economic outlook, likened to a Ponzi scheme, predicts grave financial instability. With the Congressional Budget Office forecasting that interest costs will surpass defense spending by 2024, reaching $1.6 trillion annually, the U.S. financial situation appears increasingly precarious. These developments not only threaten the nation's status as a global power but also elevate the strategic importance of investing in precious metals. Financial risks and negative trends driving gold and silver higher. U.S. federal debt. The current U.S. federal debt is around $35 trillion, with projections indicating it could rise to $100 trillion by 2034. Interest rate trends. Predictions suggest that interest rates could exceed 10% by 2036 or earlier, reminiscent of rates in the 1970s and early 1980s but with significantly higher debt levels. U.S. Treasury and sovereign debt outlook. There's an exponential increase in the issuance of U.S. Treasuries and most sovereign debts expected, with repayment options ranging from deferral to default. Financial system stability. U.S. banks have reported unrealized losses on bonds totaling $650 billion, which could worsen with rising interest rates, indicating systemic financial instability. U.S. Treasuries and sovereign bonds. The attractiveness of U.S. Treasuries and other sovereign bonds is questioned, with a near certainty of not recovering invested money due to significant devaluation and potential default scenarios. Future projections for gold and silver. Given the profound shifts in global economic policies, the outlook for precious metals remains highly optimistic. Historical trends and the ongoing devaluation of fiat currencies suggest that gold and silver will continue to be essential components of investment portfolios. Countries like Russia, with significant commodity reserves, are poised to recover more swiftly from global economic disruptions, indicating a broader move towards commodity-backed value storage, away from fiat currencies. The bottom line. The case for gold and silver continues to be increasingly compelling. Their ability to act as a hedge against inflation and currency devaluation, coupled with the growing economic instability and ineffective monetary policies, positions them as prudent choices for safeguarding wealth. As traditional currency systems face unprecedented challenges, the intrinsic value of gold and silver shines brighter than ever, promising security in our increasingly uncertain future. Listen to the full version on the official dinarport.com website and become our supporter on Patreon. Source: Dinar Caps.